Welcome, everyone. Today, we are looking at Topic 3 in your SS3 accounting series, Manufacturing Accounts. This is an advanced treatment of the topic. You already learned the basics in SS2. Now, we are going deeper. We will cover more complex elements like factory overheads, work in progress, finished goods, and the transfer of costs to the trading account. This topic is common in essay questions. You must understand how to prepare manufacturing accounts with all the necessary adjustments. Pay close attention. Let us begin. First, let me recap what manufacturing accounts are. Manufacturing accounts are financial statements prepared by manufacturing businesses. They show the cost of producing goods. They are prepared in addition to the trading account, profit and loss account, and balance sheet. The manufacturing account calculates the cost of goods manufactured. This is also called the cost of production. The cost of goods manufactured is then transferred to the trading account. In SS2, you learned the basics. Now, we will cover more complex elements. These include factory overheads, work in progress, finished goods, and the transfer of costs. Understanding manufacturing accounts is essential for your final examinations. This is a key concept. Now let me explain the components of manufacturing accounts in more detail. Manufacturing accounts have several components. The first component is prime cost. This is the cost of direct materials, direct labor, and direct expenses. The second component is factory overheads. These are indirect costs incurred in the factory. Examples include factory rent, factory lighting, factory insurance, and depreciation of factory machinery. The third component is work in progress. This is the value of partially completed goods. The fourth component is the cost of goods manufactured. This is the total cost of producing finished goods. The fifth component is the trading account. This is where the cost of goods manufactured is transferred. Understanding these components is essential for preparing manufacturing accounts. This is frequently tested. Now, let me explain the treatment of factory overheads in more detail. Factory overheads are indirect costs incurred in the factory. They are not directly traceable to the product. They include factory rent, factory lighting, factory insurance, factory maintenance, depreciation of factory machinery, and factory supervision. Factory overheads are added to prime cost to calculate the cost of goods manufactured. Factory overheads can be fixed or variable. Fixed overheads do not change with production. Variable overheads change with production. Factory overheads are apportioned to products based on a suitable basis. Examples include machine hours, labor hours, or units produced. Understanding the treatment of factory overheads is essential for preparing manufacturing accounts. This is frequently tested. Now let me explain the treatment of work in progress in more detail. Work in progress is the value of partially completed goods. It represents goods that are in the process of being manufactured but are not yet finished. There are two types of work in progress. Opening work in progress is the value of partially completed goods at the beginning of the period. Closing work in progress is the value of partially completed goods at the end of the period. Opening work in progress is added to the costs in the manufacturing account. Closing work in progress is deducted from the costs. This ensures that the cost of goods manufactured reflects only the cost of completed goods. The work in progress is valued at cost. The cost includes materials, labor, and overheads. Understanding the treatment of work in progress is essential for preparing manufacturing accounts. This is frequently tested. Now, let me explain the treatment of finished goods in more detail. Finished goods are goods that have been fully manufactured. They are ready for sale. The cost of goods manufactured is transferred to the trading account. The trading account calculates the gross profit. The opening inventory of finished goods is added to the cost of goods manufactured. The closing inventory of finished goods is deducted. This gives the cost of goods sold. The finished goods are valued at cost. The cost includes materials, labor, and overheads. The finished goods are shown in the balance sheet as a current asset. Understanding the treatment of finished goods is essential for preparing manufacturing accounts. This is frequently tested. Now let me explain the format of the manufacturing account with adjustments. The manufacturing account has a debit side and a credit side. The debit side records all costs incurred in manufacturing. The debit side includes direct materials, direct labor, direct expenses, factory overheads, and opening work in progress. The credit side records the closing work in progress and the cost of goods manufactured. The difference between the two sides is the cost of goods manufactured. The cost of goods manufactured is then transferred to the credit side of the trading account. The format is important for preparing the account correctly. You must know which items go on the debit side and which go on the credit side. Understanding the format is essential for preparing manufacturing accounts. This is a practical skill. Now let me explain the calculation of prime cost. Prime cost is the cost of direct materials, direct labor, and direct expenses. Direct materials are raw materials that are used directly in the production of goods. The cost of direct materials is calculated as opening inventory of raw materials plus purchases of raw materials minus closing inventory of raw materials. Direct labor is the cost of workers who are directly involved in the production of goods. Direct expenses are expenses that are directly incurred in the production of goods. The prime cost is calculated by adding direct materials, direct labor, and direct expenses. The prime cost is the first part of the manufacturing account. Understanding the calculation of prime cost is essential for preparing manufacturing accounts. This is frequently tested. Now, let me explain the treatment of carriage inwards in manufacturing accounts. Carriage inwards is the cost of transporting goods into the business. In a manufacturing business, carriage inwards can be on raw materials or on finished goods. Carriage inwards on raw materials is added to the cost of raw materials. It is included in the manufacturing account. Carriage inwards on finished goods is added to the cost of finished goods. It is included in the trading account. The treatment depends on the nature of the goods. Understanding the treatment of carriage inwards is essential for preparing manufacturing accounts. This is frequently tested. Now let me explain the treatment of carriage outwards in manufacturing accounts. Carriage outwards is the cost of delivering goods to customers. It is a selling expense. It is not included in the manufacturing account. It is included in the profit and loss account. Carriage outwards is recorded as a selling expense. It is deducted from the gross profit. Understanding the treatment of carriage outwards is essential for preparing manufacturing accounts. This is frequently tested. Now, let me explain the difference between a manufacturing account and a trading account. A manufacturing account shows the cost of production. A trading account shows the profit from buying and selling goods. A manufacturing account is prepared by manufacturing businesses. A trading account is prepared by all businesses. A manufacturing account is prepared before the trading account. A trading account is prepared after the manufacturing account. A manufacturing account shows the cost of goods manufactured. A trading account shows the gross profit. Understanding this difference is essential for understanding the accounting process. This is frequently tested. Now let me explain the difference between direct costs and indirect costs. Direct costs are costs that can be directly traced to the product. Indirect costs are costs that cannot be directly traced to the product. Direct costs include direct materials, direct labor, and direct expenses. Indirect costs include factory overheads. Direct costs are included in prime cost. Indirect costs are added to prime cost. Direct costs are variable. Indirect costs are fixed. Understanding this difference is essential for cost accounting. This is frequently tested. Now let me explain the importance of manufacturing accounts. Manufacturing accounts are important for several reasons. First, they calculate the cost of production. This is essential for pricing decisions. Second, they help to control costs. They identify areas where costs can be reduced. Third, they help to value inventory. They provide information for valuing finished goods. Fourth, they help to prepare financial statements. They provide information for the trading account. Fifth, they help in decision-making. They provide information for management. Sixth, they help to assess efficiency. They show how efficiently goods are being produced. Understanding the importance of manufacturing accounts is essential for understanding why they are prepared. This is frequently tested. Now let me explain the limitations of manufacturing accounts. Manufacturing accounts also have some limitations. The first limitation is complexity. They can be complex to prepare. The second limitation is cost. They cost money to prepare. The third limitation is time. They take time to prepare. The fourth limitation is subjectivity. They require estimates. The fifth limitation is allocation. The allocation of overheads can be arbitrary. Understanding the limitations of manufacturing accounts is essential for a balanced view. This is a key concept. Now let me give you sample exam questions to prepare you for your test. What are manufacturing accounts? Manufacturing accounts are financial statements prepared by manufacturing businesses that show the cost of producing goods. State the components of manufacturing accounts: prime cost, factory overheads, work in progress, cost of goods manufactured, and trading account. What is prime cost? Prime cost is the cost of direct materials, direct labor, and direct expenses. What are factory overheads? Factory overheads are indirect costs incurred in the factory. What is work in progress? Work in progress is the value of partially completed goods. How is the cost of direct materials calculated? Opening inventory of raw materials plus purchases of raw materials minus closing inventory of raw materials. What is the treatment of carriage inwards on raw materials? It is added to the cost of raw materials. What is the difference between direct costs and indirect costs? Direct costs can be directly traced to the product. Indirect costs cannot be directly traced to the product. Explain the importance of manufacturing accounts. They calculate the cost of production, control costs, value inventory, prepare financial statements, help in decision-making, and assess efficiency. Let me summarize everything we have covered today. Manufacturing accounts show the cost of producing goods. The components of manufacturing accounts include prime cost, factory overheads, work in progress, cost of goods manufactured, and the trading account. Prime cost includes direct materials, direct labor, and direct expenses. Factory overheads are indirect costs. Work in progress is the value of partially completed goods. Opening work in progress is added. Closing work in progress is deducted. The cost of goods manufactured is transferred to the trading account. Carriage inwards on raw materials is included in the manufacturing account. Carriage outwards is included in the profit and loss account. Manufacturing accounts are important for calculating the cost of production and controlling costs. Understanding manufacturing accounts is essential for accounting. This is Topic 3 in your SS3 accounting series. Study it well. It is common in essay questions. Well done.